We did it. We made 5.7%. Actually, we made 12.5% in the month of May. I started with $2,000 and turned it into $10,000 in less than a year. Now I'm making $500 to $2,000 a month using battle-tested strategies that even Warren Buffett uses to beat the market. Follow my journey and learn everything I'm doing for free. What's good, YouTube? Welcome back to Divestor. I'm going to explain the 12.5% later. It's essentially what this is plus dividends. But this, 866 divided by a $15,000 portfolio, is 5.7% plus change. So I just wanted to go over a few things in the spreadsheet, and then this is kind of to show you that this is where I got the information for the spreadsheet. So I'm a huge fan of this feature, realized profit and loss, and you can really kind of isolate what you're looking for, what you're trying to do, and it's a great way to track your gains. So that's the 12.5%. So here we go. I've been tracking both the realized profit loss from options as well as a few other things, including these dividends. As you can see here, these are basically my positions, and I'm going to explain them, but you can kind of see here everything I've done this month, besides dollar cost averaging, which I don't really need to put in here. And so this month we made $18.75 plus change, which is 12.5% plus change. I actually found this graphic, so I'm not a Excel sheets or what is this, Google Sheets master, but I was able to figure this out. Thank you to YouTube and Google and all the amazing free information we have available to us. But you can see this graph. The first half is a lot of it here is the dividends. So the big bar, the second bar here is I think it was Misty and then Coney. So that's kind of where a big chunk of this, like the first 1,000 plus that we made, and then or the almost 1,000, right? Because the options were 866. So we're at like 1,800 because of dividends. But you can see all these options plays are these small steps up, up, up. Now this big up and down in the middle is just a Iron Condor. So the loss was taken as like one individual thing, whereas really it's just a loss of $40 or so, and they just split it up into multiple candles. So so from the red bar and then the two blues after it are all one trade. They were just not. It's like the difference isn't that much, but so it looks dramatic, but it wasn't actually like that. However, it is kind of freaky, and that's part of why I stopped doing those single day expirations. So I'm kind of stepped away from day trading, and a lot of it is because what I'm doing right now is super repeatable, stable, and the risk is really easy to manage, and anyone can kind of learn how to do it. I feel like day trading is very much like a full-time job thing. If you really want to get into it, it's hard to do it on the side, whereas this is easy for anyone to do on the side. But yeah, so you can see this bar is a 1,500 bar at the top, and you can see we went from about 1,500 all the way up to almost 2,000, so 18 whatever it was, 1875. Pretty darn close, but I'm psyched. 12.5%, that's amazing. So the account value isn't perfectly reflecting that because of the up and downs in the market, and I am invested, but the profits are in there, and I'm spinning the wheel. So I did want to talk a little bit about what I'm going to do going forward, and that's what I will do next. All right. So as you can see, we are definitely up, but we're not anywhere near where I want to be, and so I just want to go over my thoughts going forward. I've traded a lot of different things. I'm sort of shying away from opening any S&P positions, and I probably should make some now, but I have some old ones. So if you look at the way it's been going this month, and you can't really analyze on Robinhood for some reason, but you can see that it's been sideways pretty much this whole time. And so, it's consolidating, and I don't like the look of it because, we've had a lot of red days in this period. And so given how things are going, I was thinking of doing Iron Condors, but I think I'll just lean into the wheel a little bit more, and I'll end up closing a lot of these and then just keeping the VIX positions and hopefully closing some of them out for neutral or profit, especially these June ones. But you can see even like the July ones, some of them are positive, and then as you go further out, a lot of the VIX positions are positive. So Marnie, I made these a long time ago. I'm not a huge fan of the stock, so I'm just wheeling these, and I got a good premium on them, so most likely they'll be profitable. But going forward, I like American Airlines. I was able to roll that and take profit and roll into a much more favorable position because it basically went south. I only claimed like $1, but I was able to improve the position and keep it without having to own the stock. And I don't really want to get assigned on a lot of these. Now, here's kind of the cool one. And I'm talking about this in the Discord. These are some of the 2x, 3x. There's 2x's, and then there's like one 3x that I like. And these are incredible for the wheel, for the aggressive wheel where you don't want to own it. So essentially, a lot of rolling and really going for premium. They're weekly dated, so I actually sold this one, and it's profitable at $7. And I was thinking of rolling it next week, and that's sort of my thought. So there it is. I'm trying to roll that, take profit here, and then open a new position so that over the weekend, because today's Friday, I can keep this position wheeling forward and kind of have it with silver. Silver's my number one in terms of the wheel. I took some profit earlier today, which you saw in the spreadsheet, and my new position is for next week. Silver's a little bit down, but I'm not super worried about it. Given the volatility market, it's totally normal. I don't mind owning silver because I can sell cover calls on it, but I prefer to be not owning it because then I don't have to spend margin on it. So I might wheel it if I had to, but I'm always wheeling for profit, luckily, and hopefully there's no serious move in silver, in which case I might just get assigned and have to sell covered calls. But if I don't have to, I can always roll it. And then we talked about the VIX hedge, where I could definitely overdid it in June, but I think it might pay off because looking at the news, things are volatile. And so, yeah, American Airlines. So I'm just pretty excited about these. So I call them the 2x, 3x list. This one I'm already using, and I'm keeping an eye on this, and even this one long term, because I've seen a lot of videos on them, and even though they're not really great for long-term investment, that's not the point. The point of them is they have a ton of premium. So here's a few things to take note of. So this is the one I already showed you, but what I did want to show you is the stats. So if you look here at the implied volatility, it's at 112. And the nature of these is that they always have high implied volatility because they are leveraged. They're 2x or more. This one I think is a 3x, see? So because of that, this is the inverse of the market, but because of that, you can capture a lot of premium. So should you do this? I don't necessarily recommend it. Maybe I don't recommend it at all, actually. I just always searching for the best options, literally. And I think this is one of them. So most likely I'll just stick to one and have one 2x position at a time, and then the rest will be, the more reliable stuff like silver and American Airlines, maybe SoFi. I was thinking of SoFi, but I like Missed You better. So I have these 3-wheel positions. That's pretty much all I'm going to do for the month of June, and then I'm hopefully going to be able to figure out the VIX hedge and cash out on some of these positions. And then the last thing I wanted to talk about going forward is SPY-U, which I really like. And the only limitation on this is that it doesn't work with my get fully invested and then use margin for options, because this isn't an option. So it's just buying and selling, but it is a leveraged S&P, and I like it a lot because I can use, not that much capital and capture these big moves in the market. So I'm going to probably cap it at $500 and just buy it on red days. And like today is a red day. It's actually below my average cost. So I'll just buy maybe $5, maybe $10. And the goal is never to hold it just to hold it, but to hold it so that I can sell it when there's a pop-up. And my thought was I could replace some of the S&P, the XSP positions with this. And I think I can still do that, but it doesn't really mesh with my overall strategy, so it might not work out, but we'll see. The reason this works is because there's no expense ratio or anything. So it's literally just like pure trading, and I'm excited about it. It could be a cool option to have, especially for small accounts, to just buy a bunch of this when the market's red, have the VIX hedge in, and then cash out on both sides.